I just use a high impact or a medium impact news driver on the economic calendar to time, just like a TV guide. You know when time the game's going to come on, right? You go on there and you look on your TV and say, okay, the Knicks are playing today at this time or tonight at that time. You know, the Super Bowl begins at this time on this channel. The markets are delivering price the same way. I know it sounds crazy, I know, but that's how I'm accurate. I'm following the schedule of when price is likely to move. And you can time when these market moves are going to occur, just simply looking at the economic calendar and blending in the key times of the day I've told you to focus on. All New York local time. So 2 o'clock on Wednesday. Where are we at here on Thursday? What time of day is this? London Open. London Open typically forms what? What did I teach? If you've been with me for a long time, between 2 o'clock and 5 o'clock in the morning, New York local time, London, generally 70% of the time, and for the folks that like to do these little number crunchings, I have people in the past say, well, that's bullshit. I went through the number. You're looking at every single week. You have to look at when the bias is suggested that we're going to entering a sell-off. Okay, if we're in a position, and I've told you on the 13th this week, I said that dollar's going to go here. We went there. Now your question is, you're like, well, how would you know that it wouldn't just reverse here and treat that as a long-term bullish order block? I know I just read your mind, right? You just dropped your potato chips, didn't you? Longer term perspective, we've already spent time reaching into premiums on that weekly chart for the dollar. We met multiple premium arrays as targets on the upside. And we've worked all of any inefficiencies out. And now we've worked into the discount arrays. So it's reasonable to anticipate that the dollar wants to go lower. We still have time. It's Friday. And everybody that sees this low here that went long, they're trying to catch the bottom. And that's why you're seeing what we're seeing here. We traded down into this low, deeper into the order block. What order block? Let's go back up to the daily for a second. This entire down close candle here, that range is the order block. If we're bearish, we want to see it trade initially into the open of it, because that's this change in the state of delivery. And then we want to see it try to reach for the mean threshold. How we know if it's going to continue going lower is how we close after hitting mean threshold. That's part of order block theory. If it closes below the mean threshold, chances are we're likely to see it want to continue going lower. If it were to go lower, we have a small little portion of this gap that looks like that. So that little gap right there, that's a small little area that's still exposed. So if we were to close below this middle of this candle that I'm highlighting here, that's the bullish order block. Wait a minute, you're calling it a bullish order block and you're calling it lower. Right. When it was up here earlier in the week, it was a discount array, but it's classified as a bullish order block. Again, bullish order blocks are not always buying opportunities. They're targets and are also means of measuring order flow. If we close below the mean threshold, half of that candle's body, if it closes below that, it is indicating that it might want to still keep going lower into next week. And if it does, where would it reach for? Sell side below this candle's low. Let me move it out of the way, I'm sorry. Below that candle's low and into that small little inefficiency. And if it accelerates, we have another fair value gap right here.